Good afternoon, everybody. Welcome to today's webinar, session 4 in the VAT Proficiency Badge for 2025. And we are basically going through our top 5 VAT questions answered. Good fun today. So these are the majority of the questions we get through either on webinars or through to our tech lines. So we thought, as part of the series, let's create a webinar for it and give you some answers. These questions are answered throughout the webinar series that we have, but this webinar is basically just to pull them out. Just in case you can't attend some of the sessions, you'll get the answers to your questions. For example, yesterday, I went through a couple of these questions, but more on that later. So as I mentioned, it is the VAT Proficiency Badge 2025. So 7 different sessions covering various VAT topics. You've got to attend 5 of the live sessions, so 5 of 7, and also must attend the quiz. Is mandatory, the quiz, so you must be there in order to unlock the badge, which will be sent to you near the end of July, because we're running these sessions twice. So if you do miss a couple of them, you can pick them up in July as well. Have no fear. But as you can see in front of you there, we're on session 4. We've already done mastering tax codes with Michael, and then I ran through the preparing, the reconciling, and the submission of your VAT returns. Today I'm taking the top 5 questions, and we'll continue with exploring the VAT verification checks, running the reports, correcting VAT transactions, and then obviously the quiz. Look at that. For a detailed schedule, www.sage.co.uk/webinars. Can't go wrong. But today, what are the questions? What we're going to be covering? Well, number 1, what tax code should I use? This question gets asked in all the webinars, and it's also a very popular call driver. I've submitted a VAT return in error. Again, another common one. Why do my figures not match the control account balance? So those 3 have already been covered in the webinars up to now, but we're going to go into a bit of detail about them. The last 2, postponed accounting and posting journals to impact the VAT return. They, again, are majoritively calls coming in rather than webinar questions, but we'll get you answers to that and some relevant guides as well. Now, the guides to them are included in links in the handouts, and the handouts are attached to the webinar. So if you download them now, you won't forget. But I would always recommend downloading them, because as I say, you will get sent a recording an hour after of this webinar, so you can rewatch it. But if you've got the handouts, stick them on a file on your computer, and you can always refer back to them if you need those guides or that assistance or just a refresher. They're in colour and they're also in black and white, so if you're like me and you like to print them off and make notes, the black and white version is going to be saving your ink on your printer. Now, the rules are that your microphone is muted automatically, so we're not going to hear you cough or sneeze. You won't interrupt me whatsoever. So don't be afraid whatsoever. I'm not going to interject at any moment. You can send us your questions using the speech bubble and the question mark. We have the wonderful Michael, the wonderful Tina, and the wonderful Abby at hand today. So we've got 3 sage brains ready to answer your questions on VAT. They will prioritise the VAT questions above anything else. Anything else will be picked up after via email. Now, today's session, scheduled for 45, it's probably not going to take that long, as I say, because it's mainly just to pull out some of the main questions. So there's not going to be extensive demonstrations or anything like that at all. It's just going to be explaining the answers to the questions at the same time. Right then, so without further ado, let us begin. First question, what tax code should I use? First things first, just to be blunt, we cannot tell you that. We can't tell you what tax codes to use. That's the job of an accountant. We can maybe make suggestions based on the information given to us, but we're not qualified or allowed to give that kind of advice in that arena. So as a strict rule, we just don't. However, as I mentioned just now, we can potentially make suggestions and give you things to think about, what factors that you may need to take into consideration. So before you ask us what the question is what tax code should I use, maybe have a look at these pieces of information in front of you. So a good or service, things that we need to know. If it's a good or service, that could impact the tax that is due. For example, if it's importing or exporting goods, that's a good example there. Is it a sale or a purchase? That's quite self-explanatory. Is the VAT going to be due on the sale or the purchase aspect? That's up to you. The location, as I mentioned in the first one, import, export, again, these are factors that can affect the VAT return. The remaining boxes kind of speak for themselves as well. Which boxes do they impact, and the kind of special treatment? There's 2 ways that you can decipher what kind of code you should be using. Well, three really. The first one is the accountant may be able to give you some advice on that. But the other two mainly are this. The first one, use the drill down to determine what tax code to use. So on your VAT return, and I'll show you just a moment, you can drill down into the VAT return. And in each drill down area of the VAT return, it displays a list of the T codes, the tax codes, that belong to certain boxes. So simply just by looking at the software, you could do that. Let's have a look at the software. Let's go over the demonstration. I think it's best that we see that in action. So if I go to my VAT return on the left-hand side here, got a list of my VAT returns. Doesn't matter which one I pick, okay? They've been submitted or not, it's irrelevant really. What it matters is that they exist and that they are there. So I'm just going to pick on the latest one, VAT return 4. Now I showed this in demonstrations over the last couple of days, but again, just in case you missed out, these are the boxes here with the values in. Now what you can do is click on the drill down box, and that will open what that box includes. So you can see box 1, VAT due in period on sales and other outputs. That's exactly what it is. And on the left-hand side here, quite easily is a list of tax codes that are applicable. What you could do if you want to make a note of them, send it to Excel. Obviously, the information to the right isn't needed at this point because what you're trying to do is decipher what tax code affects what box. So box 1 would be there. If you wanted to know what affected box 4, again, just click on the drill down, new list. And just to really put the point home, let me find the other one here. So, all the T codes, quite simple to decipher that one. So if you need to know what tax code is going to affect what box, quick way to find out. Best way to find out, I hear you ask. Well, that is to use the help center that we've created and provided for you. So I'm going to bring that over to my screen here. And what I'm going to do is sage.co.uk/help, select Sage 50 accounts, and in the search for answers, I'm going to just type in tax codes, generic. When I click search, it's going to pull up a lot of options for me, different articles, as you can see, all named. Obviously, the one that we're going to be looking for is which tax code should I use? UK only, there's an ROI. So if you click on which tax code should I use, it'll take you to this page here. Now, what's good about this, it's a kind of tree diagram, as it were. So you go on a journey with the actual website. First off, is it a sale or a purchase? Let's say it's a sale. All right then, is it a goods or a service or an asset? Let's say it's goods. Let's say it's including Northern Ireland. And as you can see, I'm applying all the correct answers to these questions, and eventually it will guide me to the recommended. And it'll say T1 or reduced rate T5, and it gives you an explanation of what these tax codes are and where they go. So essentially, you can use the software, enter into those VAT returns, have a look about, find out where the tax codes go depending on the scenario, or help center. Which tax code should I use? Nice and simple, and just follow the tree. That'll take you to that right answer. There we have it. So that is the main tool that I would use. Just back to the slides. Next question, question 2. I've submitted VAT return in error. Popular call, this one. Going to be honest, there's not much that Sage can do for an HMRC point of view. I explained this yesterday briefly, but let's go into a little bit of detail about it. So the mechanics of it, first off, is you create your VAT return in the Sage program itself. And if that is incorrect, the advice is to always restore the backup to before that VAT return was created. We're not talking about submission at the moment, remember, this is creating the VAT return. So we've created the VAT return in Sage. The next step is then to submit it to ROS or to HMRC. If there is an error with the submission, We can't do anything about that from an HMRC perspective. They use different systems, different computers, different processes. From a Sage perspective, what we can help you with is advising you to restore the backup to before the VAT was submitted. This will take you back to that insurance policy, that saved point in time that you created before reconciliation. If you went in to your Sage 50 and just deleted a VAT return from the list, would not recommend that whatsoever. The reason for that is all you're doing there is deleting the e-paper version, the digital version, a copy of the VAT return. You're not unreconciling any transactions. You're not correcting anything. You're just basically putting the paper in the bin, essentially. So we don't advise deleting a VAT return. We can't help you unsubmit because we don't have the systems. We submit them to HMRC's systems. So in order to correct a submission and error, contact HMRC. They may be able to unlock that period in time. They may be able to do certain things for you. We wouldn't. From a Sage perspective, again, all we could do is advise you to restore that backup before it was created. That's it. That's in it in a nutshell. So speak to the revenue, see if they can submit it. Speak to Sage, will guide you through the process of returning back to it. My advice is do not delete the VAT return though, because you're just deleting the paper, the digital paper, put it that way. Next question again. This is a question I've been through a couple of times over the last couple of webinars on the VAT submission. Why do my figures not match the control account balances? So pretty happy that we did cover this yesterday on the submission, but we'll go through it for those who weren't in attendance. So when you are transferring the balances across from your VAT return, your sales tax control account 2200 by default and 2201 for the purchase tax control account by default. You've got the option to transfer those over to your VAT liability. It's not a necessity, but if you do it, it's like keeping a tidy room. If you don't do it, it's not really that too important, if I'm honest with you. So when you have done it, you may find, I'm going to show you a demonstration here because I am in my incomplete VAT transfer. You may find that this one here at the bottom has been transferred. If I go to my nominal codes and locate my control accounts that I previously mentioned, which are here, you'll see that although I've transferred the latest VAT return, what I haven't done is got balances that are zero. And that is because, first reason, I haven't transferred all of them. Now, if I was to transfer all of them, again, I did this yesterday, but I'm just going to quickly show you by posting the journals. Obviously, don't do it as quick as I'm doing it. Always check your numbers and your values beforehand. This is a dummy set of data. So I'm just going to fly through these journals here, as we did yesterday. Once I've done that, when I go back to my nominal codes, you'd expect everything to be at zero. It's not, because I've been processing since submitting that period in time. So therefore, my sales tax control account, £64.80, because I've been processing. If I purchase anything again, that would be in 2201. So that is why the majority of the time they don't match up. It's because you're continually processing. You're not zeroing anything off. You're just transferring balances at the end of the day. Hopefully that makes sense. Now, postponed accounting. This one is more of an accountancy question, if I'm honest with you, but I'm going to go into it just a wee bit. Not in a great detail, but just into a wee bit. First, what is postponed accounting? Well, postponed VAT accounting, introduced in both the UK and Republic of Ireland in January 2021 to improve cash flow for your imports. It means that you can account for your import VAT on goods arriving in the UK or Ireland on a VAT return, rather than having to pay the VAT as soon as the goods arrive at the border. So it's a cash flow positive. For example, give you a scenario. A UK-based VAT registered company import some electronics from, let's say, China. The value of the goods is £10,000 and the import VAT is 20%, so £2,000. Without postponed VAT accounting, the business would pay the £2,000 VAT up front at the point of the import, later then reclaim that VAT on the return. So obviously what that's done is it's taken the £2,000 out of the cash flow of the company. So it's tying it up before it's refunded. And that's without the postponed VAT accounting. Now with postponed VAT accounting, operates different. It's a bit of a benefit. So the business doesn't pay the £2,000 up front. Instead, it accounts for the £2,000 on the VAT return as both an input and an output, cancelling it out. Therefore, that £2,000 is still there to be used, but it's still being declared. So no actual payment is made, cash flow is preserved. Now on the VAT return, these affect box 1, box 4 and box 7. So box 1, VAT due on sales and other outputs. Box 4, VAT reclaimed on purchase and other inputs. And box 7, total value of purchase, and that's the UK return. Obviously, it differs for ROI, which is on the slides on the handout as well. Also, you can click on those guides there, the UK guide below, and our ROI guide. But what I want to show is I want to show this in action, so you can see what I mean and see how it looks in Sage 50 accounts. So I've got Sage 50 open here. And just like Blue Peter, here's one I prepared earlier, look, a supplier called Import. What I'm going to do is I'm going to create batch invoice. I'm going to type in, say, £100 here. And automatically that's going to put the VAT on there. And at this point, you might be thinking, oh, hang on a minute, I don't want the VAT on there. Postponed accounting, I don't want it there. Don't worry, Sage takes care of this for you. Okay, so what happens is when you save that invoice, and you'll notice the tax code here is T18, and you save that invoice, this message pops up. The tax code you selected indicates you're using postponed accounting, and that's because of the T18 that I've used there. Sage has picked it up already. So when you save this invoice, a VAT only credit note will be posted automatically. Now that isn't for the VAT return, that's for the supplier's account. Let's take that away from it. The credit note does not affect the VAT return whatsoever. So I click OK, close on that. Now if I head to my transactions, just to show you, you can see here at the bottom what I've just done, 42 and 43. Got the purchase invoice, purchase credit. It's been taken care of automatically, and the purchase credit is for £20, the VAT amount. Hopefully that makes a wee bit of sense. So just to summarise on that one, for the UK, the postponed VAT amount adds to the invoice value. A VAT only credit note automatically posts to T18 for the postponed VAT value. Can't get my words out there. And that reduces the outstanding value altogether. Doesn't affect the VAT return itself, not at all. Just corrects the supplier balance. If your invoice has multiple item lines with VAT values, a credit is posted for each line. So it doesn't total them together and then put one big credit note at the end. It does it for each individual line that is a T18. Or in the ROI, most commonly, for example, this T40, for the VAT value reducing the outstanding value of the invoice. Again, the VAT due for the purchase is added to box T1 and T2 of VAT return for ROI, so the net effect is that no VAT is due whatsoever. So Sage is taking care of this for you in the background, all the while, working away. The best thing that you could do, and I always do this when I'm processing, when I'm creating data and I'm speaking to customers and what have you, I always advise them this. Top tip, I'm going to quickly jump back to my program, is just to check your transactions list. If you're unsure, double click into that transaction. View it and see exactly what it's about. Right click and view that was, and you can see what the build-up is. The makeup, should I say, of that individual transaction, of that credit note. So it just gives you a really good example of that, of what you're going to be looking at. Now the impact, back to the slides, is different for both. So I've included a snapshot or a screenshot of what it's going to look like for the UK and the ROI. So although we are both using different tax codes, process is still the same. Still the same process. System still works the same altogether. Again, next slide is just another example of that. You can see there the only differences are to the far right hand side here, tax codes. And if you're using that which tax code should I use tool, which I showed you before from the help guide, again, it's going to give you a better, I don't know, surrounding or knowledge base as to what tax code you should be using. For any doubt, you can speak to an accountant on that one as well, because I say we can't guide you to there. And on the VAT return, this is the impact again. The differences between the UK and the ROI. Left-hand side UK, right-hand side Republic of Ireland. You can see which boxes are going to be affected, and also you can see, of interest, the difference of the boxes as well. There's more for the Republic of Ireland on that one. So again, hope that's nice and clear. A very popular question. Finally, there's no demonstration on this one. This is going to be us basically talking you through the process. But can I post journals to impact the VAT return? Popular question. Yes, you can. It has to be done in a certain way though. And this is where I would recommend downloading the slides again in a handout for the guides. Because it might be a lot to take in on the webinar itself. So make sure you've downloaded that handout. But yes, this can be done. And there's an example of it to be shown as well. So posting journals to the VAT return. Now, most journals are posted using a T9 tax code, and therefore they don't impact the VAT return because T9 doesn't. But like I say, it is possible for journals to do that, but you have to use a VATable tax code. So for example, T1. So for a journal to be actually picked up as a VAT value, it's got to be posted directly to the nominal codes that affect the VAT return. Sales tax control or purchase tax control account as default 2,200 or 2,201. If you've got a different nominal code structure, speak to the architect of that structure. They'll give you more information. But for the sake of the demonstration, it's all the talk that we're having now, it's always going to be 2,200 to 2,201 by default. If a journal is posted to any other nominal code, it'll not be picked up whatsoever as a VAT value. We also strongly recommend, again, speaking to your accountant if you wish to use journals to amend the figures in your VAT return. There's a kind of theme with all these questions pretty much, is that we don't kind of give that accountancy advice. We operate the software, we know the mechanics of the software. If you give us scenarios, we can say, well, this probably best represents that situation, but we can't say, yeah, just do this, do that, do the other. It's just not in the makeup. So let's go through an example. Example here, sale of an asset. Now there's loads of examples that you might want to post a journal for VAT purposes, okay? We know that. There's multiple scenarios and examples that could be used. This is the most common. We can't go through every single one, but we're going to go through the mechanics of this and hopefully it'll shed some light on it. It's quite simple when it break it down, but it can be quite complex to look at first off. So again, this is an example, the sale of an asset, as you can see there in the top left-hand corner. If you do have another example that you want to go through in detail, obviously contact chat support or telephone. It's up to you, either or. But despite there being 7 parts to this journal, which has been created, as you can see on the right-hand side, there is only 2 parts that could potentially affect the VAT return. The eagle-eyed amongst you will already know, but it's going to be those 2 at the bottom. So 4,200, 2,200 nominal codes. First one, sales of assets, is net, and then tax control account, both under tax codes T1. So despite there being 7 parts of it, only the bottom 2 are going to affect the VAT return and the VAT boxes. The VAT element of the sale has been posted at the sales tax control account. Therefore, that's going to be picked up as VAT on the VAT return, as you can see. The net element, the larger value there, 4,200, has not used the control account. It hasn't used 2,200, but it's still going to be picked up in the net boxes of the VAT return using the tax code T1, because tax code T1 affects the VAT return. Now, in the UK, as a result of posting that journal, and let's just recap the balances there. You've got the sale of the asset, £8,333.33. You've got, and that's a credit. You've also got the VAT amount of 1,666.67. Where do they go in the boxes? As you can see here, the VAT amount is affecting box 1, 3, and 5. And it increases the values of box 1 because it's been posted as 2,200. So 1,667 has been posted in that area. The net has increased box 6, journal credit, posted to 4,200. For Republic of Ireland, slightly different. So as a result of the posting, you can see what boxes it affects over there. So box 1, 1,667, T1 tax code, also in the net payable, but then at the bottom there, total values of sales excluding VAT. So it's quite not so in depth with the journals. It's just making sure that you actually are posting them with the ability so they can affect the VAT return. And by that, I mean you're using correct nominal codes and the correct T codes as well. And to find the correct tax codes, again, I'll always revert back to question 1. What tax code should I use? Use the guide. The guide will explain to you as best as it can, given the scenario that you're in, what tax codes should be used, when and how. So in summary, the drill down feature for question 1, which tax code could I use? You could use that to the VAT return to decipher what tax code affects what box. That might give you a clue as to what you want to post and where. Failing that, probably the primary solution for me would be to use the help guide and use that troubleshooting device. Click through the tree, give it your answers, give it the real life scenario, and it will give you the answer that best fits the scenario that you have. There's thousands of different examples that could be used, real world examples. You know, this was bought in X country, imported over to here, and it's landed here, but it's a purchase sale. So it's one of those things where it's always best to feed the information into the troubleshooting guide and let it give you the answer. Next, if you've submitted a return in error, we can help you at Sage restore your program back to before it happened. As long as you've taken that back up, obviously, best option. We can't undo what has been submitted because we don't have access to HMRC systems. In this instance, we are the messenger. We send across the information for you. We cut out that middle person, that middle link for you, saves you time. But if an error does occur, it's the same process it was before. Contact HMRC. They'll help you out with that, see what they can do. Don't try to reconcile the VAT figures with the current balance of the sales and purchase tax control accounts. It's not going to happen. Again, go through that in details. Because of the way that you transfer them, they're not really going to match. Ensure you use the correct tax codes to account for postponed VAT automatically. Again, using the slides and the guides that we have available, you'll be able to answer all these questions. Not only that, you've got the chat support, you've got the telephone support. They're always going to be at hand to help you, but obviously we can't give answers direct for those questions. Now, lastly, journals can be included on your VAT return, but we always recommend speaking to your accountant first. I think we've got into detail on those questions there. I think we've answered most of them. Looking at the questions that have come in, I think the guys have been absolutely on top of them as well, which is brilliant. And if you do have any more before we end the webinar, get them in now. But the guys have done fantastically well because some brilliant questions have been coming through. But as I say, today's webinar wasn't going to be the longest. It was basically to cover off. So a good question from Leslie there is if you've submitted a VAT return in error, you restore your accounts to the save previously from your backup, so that's save point out insurance. Can you resubmit your VAT return in the correct format? That is a really, really good question. I'm glad you asked that one. I'm going to add that to the slides for next time. So if HMRC, you've spoken to them, or the revenue, you've spoken to them, and they've undone what they needed to undo, i.e. they've unlocked that period in time for a submission to still be due, then yes, you can resubmit in the same format, because what you've done in your Sage 50 account software is by restoring that backup, you've gone back in time to before any of that was done. So from a Sage software perspective, it's like it never happened at all. The only trace of it then is on the systems of the revenue. So when you do restore that backup, it's just going to be a standard processing again. Obviously, whatever why it was submitted in error, you need to fix that issue. You know, if values were incorrect, or I don't know, either or. Make sure that it is going to be correct next time you submit, because you don't want to be waiting on the phone to revenue again to try and get them to unlock a period in time. But it's a really good question. That Sage will be able to guide you back to the best place possible to before it was submitted, but you will be submitting it exactly the same process. There's no different process. You're just taking your rubber and rubbing out what you've originally done. Hopefully that answers that question, Leslie. Good question, though. Thank you. I think Abby is picking up the last question that has come in now. So just wait for that one to be answered. In the meantime, I'll just thank you all for your attendance. So far, it's been absolutely fantastic seeing the same names coming to the webinars. We love doing these badging events. We love giving you something back for your attendance and the knowledge that we give you, something that you can put on LinkedIn, you can put on your CV, you know, you could attach it to your emails. We get emails now of customers asking us questions, and the VAT badge or the previous badges, like the management badge, report badges, are there. And it's great to see. Just lets people know you're educated and in full knowledge on these subjects as well. So again, thank you very much for your attendance today. We will be submitting you a feedback form. So if you could complete that for me, that would be doing us a massive favour. We read absolutely every single comment when they come through. Some companies don't, but we definitely do ourselves personally. And we like to see what we could do better next time, what you liked as well, because if you liked something, we'll continue it. Most importantly, we would like to know what you want to come next. Give us ideas. What do you want to see on webinars? So far in this series, we've had so many answers to that question that we're compiling a list and we're working through it to try and figure out who's going to be building what. Fantastic. So Helen came with a comment there. Good luck getting hold of HMRC. I can't comment on that. I'm not sure people who are watching me share the same sentiment. We can't share that link, unfortunately, Helen. We're not allowed to, but Helen was basically trying to notify everybody that there is different ways of contacting HMRC, not just by the phone. You can notify them. But what I would do in that instance is I would go on Google. We can't recommend that, or a search engine. We can't show a preference. Type in other ways to contact HMRC, but that is a good point, Helen. I'm smiling as I read that. But the guys, I think, are on top of the questions. Just having a look at them now. Yeah, superb. I'm going to leave you all to it. Thank you very much for your attendance today. Hope you have a lovely week. Enjoy the heat wave that is currently happening. And we shall see you for the next event. Bye for now.